Right, so you're an expat living in Vietnam or maybe thinking about making the move. And, taxes are going to be the thing, right? Well, today we're diving deep into a guide from the Harley Miller Law Firm, published in December 2024. And thankfully, we have a tax specialist here to help us make sense of it all. Welcome.
Thanks for having me. It's great to be here.
So this guide starts with tax residency, which makes sense. That's kind of the foundation of everything else. Could you explain what makes someone a tax resident in Vietnam?
Well, there are two main ways. The first is if you're physically present in Vietnam for 183 days or more in a calendar year, then you're automatically a resident for tax purposes.
Okay, so for those planning a long trip, those days can add up fast. But it's not just about being physically present, right?
Right. The second way is a bit more about having what they call habitual residence here. So it's things like having a permanent address, even if it's rented long term, basically where you're establishing your life, not just visiting.
So it's not just about vacation days, it's about putting down roots. Why is this distinction between resident and non-resident so important?
It has a big impact on how you're taxed. Residents are taxed on all their income worldwide, but non-residents are only taxed on income they make within Vietnam.
Okay, so that's a pretty big difference. Now, I know Vietnam has what's called a progressive tax system for residents, meaning the more you earn, the higher the tax rate. Can you give us a quick rundown of those rates?
Sure, the rates start at 5% for the lowest income bracket and go up to 35% for income over 960 million Vietnamese dong. But remember that 35% only applies to the amount above that threshold. It's not like your whole income gets taxed at the highest rate.
Oh, that's good to know. So it's more like a tiered system, where only the portion of your income in a higher bracket gets taxed at that rate. Makes sense. Now, for our non-resident listeners, what's their tax situation?
Much simpler, they pay a flat 20% on any income they earn inside Vietnam.
Wow, so there's a big difference there between the highest resident rate of 35% and that flat 20% for non-residents. Why do you think that is?
Well, it's pretty common around the world, and I think it reflects the level of engagement with the Vietnamese economy. Residents, especially higher earners, they use more public services and infrastructure. They might be investing in property, starting businesses, really contributing to the economy long term. Non-residents usually have a more temporary impact.
That makes sense. So whether you're a digital nomad or planning to move here long term, figuring out your residency status is crucial for understanding your tax obligations. Okay, so we've got that foundation laid. Now let's talk about what specifically gets taxed in Vietnam. The guide lists 10 different sources of taxable income. Could you walk us through those, focusing on what's most relevant for expats?
Of course, you've got the obvious ones like salaries, wages, bonuses. But it also includes income from business activities, investments, real estate royalties, even inheritances. For expats, income from overseas investments or pensions could also be taxed.
So it's not just about your regular job. Income from other sources matters too.
Exactly. And remember, for non-residents, that 20% tax only applies to income earned in Vietnam. So if you have an online business back home, that wouldn't be taxed here.
That's a good point. It's all about where the income comes from. Now, before everyone starts panicking about how much they'll owe, let's talk about deductions. What are some ways expats can reduce their taxable income in Vietnam?
Vietnam has a good range of deductions to make the system fairer. One of the biggest is the personal deduction, a flat amount everyone can deduct. In 2024, it's 132 million Vietnamese dong per year.
Wow, that's a decent chunk of change right off the bat. And what about families with kids? What about deductions for dependents?
Absolutely, you can deduct 4.4 million Vietnamese dong per month for each dependent. This helps families manage their money and encourages responsible family planning.
Yeah, that can really add up for larger families. So beyond those personal and dependent deductions, what other ways can expats reduce their taxable income?
You can get deductions for insurance premiums, voluntary pension contributions, charitable donations. These aren't just about saving money, though. They encourage people to invest in their future, support their communities, make good financial choices.
I like how tax laws can reflect those values. Okay, before we get into the actual filing process, let's talk about double taxation agreements, or DTAs. What are they and how can they help expats in Vietnam?
DTAs are agreements between countries to avoid being taxed twice on the same income. So imagine you earn income in Vietnam, but also pay taxes on it in your home country. That's double taxation. Luckily, Vietnam has these agreements with over 80 countries, so there's a good chance yours has one too.
Wow, that's a lot of countries. So how do these DTAs actually work to prevent a double taxation?
There are a few ways they can work. Sometimes you can get tax credits to offset taxes paid in your home country against what you owe in Vietnam. Some DTAs exempt certain types of income completely from Vietnamese taxes, and others offer reduced tax rates on specific income categories.
So depending on the DTA in your situation, you could be saving a lot of money.
Exactly. Checking for a DTA should be one of your first steps when planning your finances as an expat here.
All right, so we've talked about residency rates, taxable income deductions, DTAs. That's a lot. But let's get into the actual process of filing your taxes in Vietnam. The guide mentions 3 ways to register for a tax code. Can you take us through those?
Sure, the first option is registering directly at the tax authority. It's straightforward, but involves some paperwork and a trip to their office.
Not exactly the most fun way to spend an afternoon, especially when you're still getting settled. Are there other options?
Yes, you can register through your employer. That's usually the easiest way they handle everything for you.
That's a nice perk of having a job in Vietnam. And for the tech-savvy folks, is there an online option?
Absolutely. You can register online through the General Department of Taxation's e-portal. It's the most convenient and modern way to get your tax code.
See, filing taxes in Vietnam doesn't have to be a nightmare. Okay, so you've got your tax code and you're ready to file. What deadlines do we need to mark on our calendars?
Well, it depends on how your taxes are declared. Monthly taxes are due by the 20th of the following month. Quarterly taxes by the last day of the first month of the next quarter. And annual personal income tax by the last day of the 4th month from the end of the calendar year.
Okay, I think I got all that.
Mhm.
But what happens if you leave Vietnam before the tax year ends? Do you still need to file?
Yes, you do. If you were a resident up until your departure, you need to finalize your taxes for salary and wage income by the 45th day after leaving.
So no escaping those taxes, even if you're heading back home. It's best to wrap things up properly before you go. Now let's talk about what happens if you miss a deadline or don't comply with these tax obligations. What are the consequences?
Well, the consequences vary, but they can include late payment interest, which accrues daily, and late filing penalties, which could be warnings or fines.
So it's not just a slap on the wrist, there are real financial consequences.
Exactly. And in more serious cases like tax evasion, you could face bigger fines or even criminal charges.
Yikes. Definitely not worth the risk. It sounds like being organized and informed is key. Speaking of which, the guide has some helpful tips for staying compliant. What stood out to you?
The most important tip is to keep thorough records of all your income sources. This minimizes errors and makes filing much smoother. And keep all supporting documents for at least 5 years in case of an audit or dispute.
5 years. I'm definitely guilty of throwing out documents I think I don't need.
It's always better to be safe than sorry. And if you're ever unsure about a complex tax situation, don't hesitate to talk to a tax professional. They can help you navigate those tricky parts of Vietnamese tax law and make sure you're doing everything right.
That's great advice. Sometimes expert help is invaluable, especially with taxes. Okay, let's wrap up this part by answering a few common questions from the guide. First, can you pay your taxes in foreign currency?
Generally, no tax declarations and payments need to be in Vietnamese dong, but there might be exceptions for certain convertible foreign currencies. It's best to check with the tax authorities or a professional to be sure.
So don't assume you can just use your home currency. And one more question. We mentioned this earlier, but it's worth repeating. What happens if you decide to leave Vietnam before the end of the tax year?
You're still required to file a final tax return and pay any outstanding taxes before you leave. If you haven't filed a statement before leaving, you can authorize your employer or someone else to handle it for you. They then become responsible for the taxes you owe.
So even if you're dreaming of extending your trip and never coming back, those taxes need to be taken care of. It's about leaving on good terms with the country and your finances. All right, that wraps up part 1 of our deep dive. We've covered a lot, laying the groundwork for understanding income taxes and expat in Vietnam.
We've given you the basics, and in part 2, we'll dive into some practical tips for navigating the system. And we'll talk about common pitfalls to watch out for. So stay tuned.
See you soon.
Welcome back to our deep dive into Vietnamese income tax for expats. In this part, we'll get into some of the practical aspects of navigating the system. Things that can trip people up, cause confusion.
Yeah, let's unpack some of those details. Now, the guide mentions housing allowances, which a lot of expats get. Are those taxable in Vietnam?
That's a very common question, and the answer isn't always simple. Usually, housing allowances are considered taxable income, but there's an exception. If your employer pays the rent directly to the landlord, then the allowance is not taxed.
Oh, so it depends on how the money is paid. Direct to the landlord means no tax for you, but through your paycheck means it's taxable income. Interesting.
And there's another layer to this. Even if your housing allowance is taxable, it can't be more than 15% of your total taxable income, not including the rent itself.
Okay, so there's a limit on how much of the housing allowance can actually be taxed. That's helpful for budgeting.
Exactly. It's one of those things that shows why it's so important to really understand Vietnamese tax law. It's not always black and white.
Yeah, and this is where having a good tax advisor can be really helpful. They can help you optimize everything and make sure you're not paying more than you need to.
Absolutely. They can be worth their weight in gold, especially when the rules can be so complex.
Now let's talk about something we touched on earlier, the importance of keeping records for 5 years. Why is that so crucial?
Imagine this. You filed your taxes, everything seems good. Then 3 years later, you get a notice from the tax authorities. They're requesting an audit.
Oh, that sounds stressful.
It can be, but that's when having all those records organized and ready becomes so important. You have proof of your income expenses, deductions, everything to support those original filings.
So it's like insurance against future problems.
Better to be prepared.
Exactly. And it's not just for audits either. Disputes can come up too, maybe with an employer or a business partner. Having those clear records helps you resolve things quickly and protect your interests.
It's about peace of mind, knowing you've got everything in order. Before we wrap up this part, any final advice for our listeners who want to stay on top of their taxes in Vietnam?
I'd say the most important thing is to stay informed. Tax laws can change, new interpretations come up. Subscribing to newsletters from firms like Harley Miller, attending seminars, joining online forums, all of that can help you stay in the loop. So it's not just a one-time thing, you learn it and you're done. You need to be proactive and keep up with any changes.
Exactly. Proactive planning is the best way to avoid surprises and stay compliant. No one likes scrambling at the last minute.
Very true. And remember, everyone, don't be afraid to get professional help if you need it. Sometimes that expert advice is worth every penny.
Couldn't agree more. It's often the best way to navigate these complexities with confidence.
Great. Well, that wraps up part 2 of our Vietnamese income tax deep dive. We've gone from the basics to some of the more in-depth details. But stay tuned for part 3, where we'll share some helpful resources and tips to stay organized and informed. We'll see you soon. All right, welcome back for the final part of our deep dive into Vietnamese income tax for expats. We've covered so much ground. From tax residency and all those deductions, to deadlines and those penalties you really want to avoid.
We've really tried to give you everything you need to understand the system and feel good about navigating it all.
Absolutely.
Yeah.
But knowing the rules is only helpful if you know where to find them. So in this last part, let's talk about the resources and tools that can make your tax journey in Vietnam way smoother.
Yeah.
What are your go-to sources for reliable information and help?
Well, the Harley Miller Law Firm website is an excellent place to start. That's where our source material for this deep dive comes from. They have articles, guides, FAQs, all specifically for expats, and their contact information is right there if you need more personalized advice.
Yeah, it's like having a direct line to the experts, which can be such a relief when you're dealing with something as complicated as taxes. Beyond the Harley Miller website, are there any government resources you'd recommend?
Oh, definitely. The General Department of Taxation's website has a ton of official information, tax laws, regulations, forms, you name it. And it's all available in both Vietnamese and English, so it's really accessible for expats.
That's fantastic. It's great that they make the effort to provide clear information in English. Now, how about staying up to date on changes in tax law? We've talked about how important that is. But are there any specific newsletters or publications you suggest subscribing to?
Definitely subscribing to newsletters from good law firms and tax consultancies. Ones that specialize in Vietnamese tax law can be really helpful. They'll often break down recent changes and how they might affect expats specifically.
So it's not just knowing the rules now, it's about anticipating what might change and planning for those changes.
Exactly. Proactive planning helps avoid those last-minute scrambles and surprises.
For sure. Now let's talk about something people might not think of right away. Community. Are there any online forums or groups where expats can connect with each other to share experiences and ask questions about taxes in Vietnam?
Oh yeah, there are lots. Social media sites like Facebook and LinkedIn have tons of expat groups. All about life in Vietnam, and taxes are always a hot topic. Those groups can be amazing for getting practical tips, learning from people who've been there, and even finding recommendations for tax advisors.
It's like a built-in support system where you can bounce ideas around, share frustrations, and celebrate wins together.
Exactly. Shared experiences help create that sense of community and remind you that you're not alone in this.
Okay, so we've got the Harley Miller Law Firm website, the General Department of Taxation's website. specialized newsletters, and those online expat communities. Those are some awesome starting points for anyone who's feeling a bit overwhelmed by Vietnamese income tax.
I agree. With all those resources, you're in a good spot to become a tax-savvy expat.
And remember, folks, understanding the system planning ahead and getting help when you need it can make this whole process much easier.
It really can. It's about breaking it down step by step and knowing where to go for information and support.
Well said. Well, that brings us to the end of our deep dive into Vietnamese income tax for expats. We hope you found it informative and helpful, and maybe even a little bit empowering.
Thanks for joining us.
Yeah, we encourage you to explore those resources we talked about, connect with other expats, and remember, with a little effort, you can totally conquer this part of living in Vietnam and really enjoy all the incredible things this country has to offer. Until next time, happy filing.